for itself. Manav Chopra, head of research at Indiabulls Ventures, joins us right now on the show. I would have wanted to start with some of the liquor companies, but let's first start off with the broad market view because that is buzzing over the last couple of days. Manav, good having you. Thanks so much for taking the time out and speaking with us. How are you approaching trade today? We are at the end of the week, but the last 2 days indicate that the markets have not really taken into account any kind of, no nerves at all in the markets. 2 days, about 1% gain. Today the market breadth too is looking positive. Does all of this set us up for slightly higher levels early next week?
Absolutely. In fact, Neeraj, when we had spoken last week, I did mention the kind of a decline that the markets are witnessing more or less is definitely corrective in nature. We have already seen a very sharp rally from the lows of 10,000 towards 10,800, and even though the declines were quite sharp on the other sectors, but after a consecutive decline of more than 7 trading sessions, eventually the prices from the oversold levels will see a good bounce back, and that's what we have witnessed in last couple of trading sessions. The important key trigger to watch out for the markets since today's closing, if Nifty manages to close above 10,600 on the weekly closing basis, I sense we will see the levels of 10,700 to 10,750. That would be the immediate levels to look out for. The support for the Nifty would be at 10,550 for a very short-term traders. Similarly for Banknifty, the banking index has also taken support near its important rising channel, and this 7-8 days of decline has been retraced in less than 2 trading days. We've seen more than 50% retraced rally, so that is showing that the undertone is much stronger than other broader things, and also the momentum is getting back. So we have seen fresh short covering, which has also been induced by fresh long. So I think going forward, the bank Nifty would see the immediate targets of close to 26,350 to 400, and that would be the immediate target. So I think for the near-term perspective, one should definitely maintain a positive bias and maintain a buy on dips approach till the important support levels are held.
Manav, good afternoon. The rally on the benchmark indices today is being backed by some of these metal counters like Tata Steel and Hindalco. We've seen a lot of volatility, lots of ups and downs in a lot of these metal stocks. What's really going on? What sense are you getting from some of these movements when it comes to these metal players?
Going for the metal space, I think it's important to be more of a stock specific approach than taking metal index as one thing. Tata Steel is definitely the weakest from the metal space. It has last week did see a good breakdown below its important key support levels, and it is just retracing. I sense Tata Steel, in fact, going forward, one should definitely can do a pair trade. One can go long Hindalco or short Tata Steel. This could be the pair trade which would work out quite well. But if I have to be long in the metal space, I would definitely would want to be with JSW Steel and Hindalco. JSW Steel, after a short-term correction, has seen a breakout on the daily charts, and the volumes are also indicating that going forward, we could see the levels of 340. Hindalco has an important support around the levels of 240 levels on the downside, and I think in the immediate basis 255 would be the target.
Okay. Mr. Manav, Sarvendra Srivastava also joins us on the show with his thoughts. He gave a fabulous call on Balrampur Chini last week, which we will talk about. Intraday has had big movements too. But Sarvendra, start off with the index call first. Again, you were relatively bullish. The last 2 days have been fairly good. What are you advising your clients to do now? If they had previous calls, or if they want to take a fresh call right now?
Yeah, very good afternoon. No, I think last what we carried was 10,400 on the downside as a level. So yesterday we bounced from there, 30 odd points I think were left. So if you can give me that much leeway, I think 10,400, that was the target that we were looking at. So that target more or less into this correction is over. So that call more or less got closed, and now what we believe is that it will take some time. So 10,400 to 10,650 will be a trading range. Now, last couple of days we've kind of pulled back to the upper end of this range. So I would say that no great risk rewards from here to trade a call on the Nifty. So I would maintain a range between 10,400 to 10,650 and wait it out for the range to break either side to take a more more convincing call. Or else, if you do some pattern, if you start making a pattern or something, then probably we can look at that trade. But as of now, I don't see any clear signs to take a trade on the Nifty. So I would say a range, and I would say an avoid at the moment.
Okay, Manav, one of your calls for today is Bhartiartl. Is this because of the short covering bout that we saw yesterday? To what extent can we expect this momentum to continue? And your other call is, of course, M&M. If you could take us through both these views from your side.
See, Bharti, has observed a series of decline from its peak of 560, and we haven't witnessed any good retraced rally or any sustained move. I think the formation that the stock has observed in last couple of trading session is definitely hinting for a bottom in place. And there are a lot of short squeeze pattern that has also formed at the current levels. I sense that going forward, this stock could see a good rally close to the levels of 395, which is our immediate target. And the stop loss can be placed at 370 on the lower side. My other call is buy on M&M. I have been quite bullish on the auto space. It's quite some time, and Mahindra is definitely one of our top picks. The stock has recently observed a corrective decline from the highs of 890, and it has bounced from its important short-term support levels and has breached its trend line. So overall it's indicating formation whereby we could see a new swing high. Probably we could even exceed the highs of 890. So the upside target for this would be at 910 for a short-term positional trade, keeping a stop at 840 on the downside.
Okay. Sarvendra, good afternoon. You have 3 picks for today. Can you take us through your calls today?
Yeah, very good afternoon. The whole stance here now remains that we have kind of picked from the basket, which is very, very oversold now, because short-term correction target on the Nifty was met, and we can see stocks which have corrected more and very, very oversold. So if we thought that the market will spend some time here, so we thought that we'll take some bullish trades for a change after a long time. So I thought we'll take all the 3 on the trading side, on the buy side. The first one being tin plate, where we believe post a nice rally, a correction is over, and the uptrend should resume. So I would maintain their targets in the region of around 215 for tin plate on the upside, and keep a stop loss there at 182.80. And take a long trade. Tin plate, ideally you would want to put a stop loss on a closing basis, because it is a slightly illiquid name. Pardon me. The other 2 names are buy on KSL, which is Kaveri Seeds, for a target of 538 with a stop loss at 496.80. Again, a candidate which is looking like that it is shaping up well. And again, a oversold candidate, which is Hutco. I think post IPO, the hammering has been taking it lower, and now first signs of this entire decline post IPO, probably first sign that it's kind of stopping now and wanting to turn. So here I would say that again, closing only stop loss you'll have to take. The target is decent. You should look for a 15 to 20% kind of an upside here. So a target of around 68 to 70 is doable for Hutco. So more a positional trade. And if you're taking that trade, keep a stop loss at 53.80 on a closing basis.
Okay. Sarvendra gave an interesting call on Balrampur Chini as well, but you will have to wait a little bit for that when we discuss that with Sarvendra Srivastava, and some very interesting calls with Manav as well from his last time's appearances. But first, we've done a fair bit of technical call. Let's talk about the fundamentals. Deepak Shenoy, founder and CEO at Capital Mind, joins us right now on the show. Deepak, so good having you as always. Thanks so much for taking the time out. I want to start off with a basic question of what you're doing at your portfolio management services right now, Deepak. The last that I spoke on this topic, which was probably a month and a half ago, you were talking about deploying the cash in an SIP or a staggered manner. Are you continuing to do that, or are you holding out for some drastic falls that could come in, looking at all that's happening around the world?
Well, I think, Neeraj, to be honest, we are still doing the SIP mode. We continue to retain a fairly high cash component in most portfolios. So at this point, it's picking and choosing. Results, have been encouraging for a lot of stocks that we've been tracking. So, if those stocks were to fall a lot more, I might do a slightly bulkish purchase, but those points haven't yet come where we're looking at this and saying this is an insanely good purchase price. I think most of the stocks we're looking at are fairly valued. I would love them at lower prices, so I'm still looking for a lower price. I am not holding off. We're still buying a little bit. We're buying so little that it will take us 6 months to actually finish our buying, but that's fine.
Deepak, you have an interesting...
Just before that, sorry, just want to mark this. I don't know what's happened here, but the rupee has had a really, really sharp uptick. Look at that, 67.76. I mean, I can't foresee any reason for this, but there's been a sharp move. I don't know if there's intervention or something else that would have happened this, but a big appreciation in the rupee. The chart is inverted, obviously, as would be the case, but from 68.25 when we started off the trade today, right?
Yes,
68.21 or 25, currently at 67.76. That's a really sharp appreciation that's come out in the rupee today. Can't quite fathom the reason really, but Deepak Shenoy, any thoughts here? Sorry, Agam, to cut you here, but this is more important here. Deepak Shenoy, just a really sharp bump up in the currency.
Yeah, I think much of it is probably RBI action. Now, RBI itself, they purchases dollars in a very big way if it wants to, because it wants to move the market. It won't do these little tiny, 10 million, 50 million kind of trades. It probably do $1 billion at one time or a very short span of time to make an impact and tell participants that listen, I am participating and I'm in the market. So players also take an advanced view. If RBI is coming in, they will exit any short positions or positions that are long on the USD in comparison. So this will happen. We'll have to wait a couple of days to see how it settles. RBI interventions typically, they lose steam after a short time unless policy follows through. So it looks to me like an RBI intervention is going.
Deepak, until this morning, there were all sorts of guesses about the rupee's likelihood of moving to the mark of 70. That said, do you have any plays, any short-term plays or trades based on the movement of the rupee right now in the equity markets?
Well, short-term, I guess the momentum should appear in the IT players, and we've been talking about mid-cap IT for a while. I think they benefit as well. There is almost no movement in pharma, which is another big beneficiary. So I think that's another point where you can pick and choose, especially stocks which are not extremely expensive. There is also textiles, which is another big exporting area. There is some complications over there because of the way the textile performance has been after GST has come in and how the refunds of some of the duties have impacted their working capital, but overall I think some of the textile players will also benefit. There is a significant number of importers, especially downstream players in the petroleum industry, who will get hurt a little compared to what it was earlier. So I think so there's a play going long in the exporters, going short in the downstream oil component, effective importers of crude, and that I think is the play here. If you're looking at it from a short-term perspective, however, my long-term view over here is that the rupee does this every 5 years. It's going to do stay in a zone for 4 or 5 years and then do a massive 10 to 15% depreciation. Simply because of relative inflation levels between us and the West. We are likely to depreciate and we should in all probability see 70 plus. It wouldn't surprise me. So I think better be prepared for it no matter which way.
This smacks of, I would presume, I think somehow, whatever little understanding I have, we would presume that this has to be such a sharp uptick, has to be some form of intervention that would have come in. I don't know if the Reserve Bank has talked about it at all or no, but just a really dramatic uptick in the rupee vis-a-vis the dollar. 55 paise right now. That's fairly strong, very close to the weekend. Anyways, we'll try and get some voices around this. So while we wait for that, there's a market beyond the currency on the equity side, which is doing really, really well. Couple of thoughts, Deepak. 2 or 3 names, expensive ones, which are becoming more expensive. That's actually the nature of the market, right? Just so concentrated. But now I'm looking at the non-Nifty names. Pidilite up 6% after the numbers. 1142, what do you make of the results and the valuations thereof? Bajaj Finserv at 6057, again another 4% trading at life highs. And I'll throw in a Britannia there. 3 large cap names, non-Nifty, some form of consumption theme attached to all 3, direct or indirect, and all of them trading at new highs.
In fact, we're long all of them on our momentum portfolios, Neeraj. If you are, at this point, momentum doesn't look at valuation, it looks just at price momentum. And all these stocks are overvalued. I probably would find myself surprised if I were to hold them or start buying them now at fundamental valuations. But if you've held them, the momentum is in your favor. Pidilite's numbers have been awesome. As much as the stock sounds like it's overvalued, the numbers have been extremely, at least decent enough for a stock like it to justify some premium. Bajaj, I think it's partially a play on Bajaj Finance as well and the insurance plays. So because the insurance play valuations have been kind of established by the likes of HDFC Life and perhaps ICICI Pru, you're getting a little bit of a higher blended valuation given to Bajaj Finserv. Having said that, it's still, according to me, fundamentally these are difficult to justify, all 3 of them. But at this point, momentum is there. There's acting like defensives as well. The big money seems to be going there. So these stocks, I think I would personally play them only in the short term, looking at momentum. This is not a great time to look at those guys fundamentally.
There was a lot of focus on Bajaj Finance last week, but it was Bajaj Finserv which actually took over, and then we saw outperformance coming through. This is of course only on a weekly basis. If we can get a chart check on Bajaj Finserv right now, which is trading at well over the mark of 6,000. Can I? Yes.
Do you want to go to Jayesh Mehta first? He's already joining us on the phone line.
Oh yes, of course, yes. All right, so we do have Jayesh Mehta of Bank of America Merrill Lynch who is joining us on the phone line. Jayesh, good afternoon. Thanks for joining us. What are you making of this sharp surge in the rupee right now? We have seen a very sharp appreciation. What do you think can you attribute the reasons to?
The reasons for depreciations are also global, and the reasons for appreciation are also global. So, yeah, definitely today morning's OPEC statement of maybe easing the supply, So that's definitely brought the oil a little bit down. And of course, last night you had U.S. Treasuries also below 3%. So both put together, I think more to do with oil. And if we don't see oil going above 80 very soon, I think we are in a safe wicket. But then it's purely to do with oil. And of course, the sharp move is mainly because of positioning. Unwinding also happens.
Okay. So, Jayesh, afternoon, Neeraj here. You don't reckon this could have been some central bank action? It's just so sharp. So just wanting your opinion on that.
No, it's nothing. It's more to do with global. You look at oil, right? After the OPEC news is almost like $3 to $4 down from the peak. So from that perspective, it is looking at a trend which is a little bit downwards. So that's purely because of that. And of course, you had positions which were long, so that's kind of getting unwind.
Okay, Jayesh, one last question. You must be having a busy day right now. What's the near-term outlook? So this is a point that you mentioned which we didn't foresee. But what now? I mean, after this sharp uptick that we've seen, is this the range that we maintain?
So I think once the positioning gets unwind, right, and if the oil moves back again, to rebuild the positioning also it takes time. But then if it sustainably moves back again, right, moves up again, then of course the same guy who sold may actually come back. But that, I don't think it will move with just $1 or $2 in the oil. So it has to look more near to 80s. That's when people will again, get a little panicky about it.
Okay. Jayesh, we'll leave it at that. Thank you so much for agreeing to this quick interaction. So, that's coming in from somebody who is in front of the dealing desks, arguably not because of RBI central bank action, but probably got to do with what's happening across the world and predominantly oil. I mean, we've seen the part of this depreciation also happening in large account because of that. Okay, having said that, rupee is one thing, consumption is the other one.
Right. But no, actually, I was just addressing the Bajaj Fin twin stocks, and I was going to get a market check on both Bajaj Finserv as well as Bajaj Finance. Bajaj Finance, which has been relatively stagnant over the last 3 to 4 days. Can we bring in Manav for a view on both these counters? Manav, how are you seeing trade develop now, especially on Bajaj Finance, and how would you compare that to what we can expect for Bajaj Finserv?
See, at the current levels, definitely the momentum looks quite strong. The stocks, both these stocks, after a good sharp rally, observed a short-term consolidation and eventually are observing some breakout happen on the intraday levels. There has been, usually in such a scenario, the momentum is usually what follows. And one key important thing that to look out is that as the prices make new high, the volume also does. So this is the simple formation that has happened. I think going forward, we can expect this rally to continue on the upside. Short-term targets could be in the range of 5 to 8% on the immediate basis, and usually a breakout from such flag patterns, such targets are likely to be achieved within less than a week's time.
Okay, yeah, but both these Bajaj Twins have done rather well for themselves. Deepak Shinoy, maybe one thought on Bajaj Finance too. You give us a thought on Finserv. Does the juggernaut continue? And then, of course, my producer tells me you've been kind enough to share an idea for our viewers, something that they can invest into. If you can share your idea and why do you like it?
So firstly, on Bajaj Finance, I think it's been a phenomenal growth story. You've seen that move. I don't know if you watch or track all of the announcements that come even for promoters pledging shares. You would typically find Axis or SBI or some of the companies that would actually take promoter shares for pledging and then offer them credit, or sometimes it goes to the company and so on. Recently, we've seen a lot of entries in Bajaj Finance there as well, where actually people are moving to Bajaj Finance perhaps because of attractive rates or better service. So there is this growth that's happening now across. They're getting into secured debt from relatively unsecured consumer durable debt. They have, the one place that they haven't gotten into is home finance in any big way, but I think, there is a lot of scope for them to expand. They have extremely good credit practices, so I like that story. We don't own them, for some reason they have sounded a little overvalued to us, but now they're appearing like they're a strong story no matter what the price. But more on that as we add them perhaps. On the stock idea that we've been looking at and we've owned them for a while, it's Tata Chemicals. And the recent results were also indicative of, it's a massive change actually from what it was in the past. It was a slow growing, relatively low margin company that had a bunch of individual different businesses. They sold the fertilizer business to Yara, and they've also gotten rid of the Haldia plant as well. So that's gone. It's going to take off a substantial amount of the debt. I think they're left with about 1,500 crores of debt. They also got a good amount of money from Tata Sons when they bought over the cross holdings, I think, of between Tata Global and Tata Chemicals. So in that process, the company is a lot less levered now. They're focusing on their primary chemicals area, which is, I think, definitely a much higher margin business than otherwise. Also on the brands that they own. For instance, they own Tata Salt, of which now they finally started advertising. You had a brand which was India-wide well known, but almost never well advertised. So you had that, having to move into the food stuff space. They do some of the grains and the dals and stuff like that. They are available online as well. So there's a change in the business mix, much lower leverage, I believe, at least from where it is. Don't look at current results, because obviously with all the things that have happened in the last year, their PE is sub 6 or something like that. But I think sustainably they're at probably 12, 13 in terms of price to earnings, and possibly will grow to much higher levels. So I believe, longer term, 5 years, this is going to be a good story.
Okay, Deepak, well, thanks for joining us and giving us an update on the markets as well as taking us through some of your views. We will continue tracking Tata Chemicals. Of course, that's the call coming in from Deepak Shenoy from Capital Mind. But on to Traders Carnival now. We have Navneet D'Souza, who has a very special guest with her. We have Atul Suri of Rare Enterprises joining her in this conversation. Navneet, over to you.
Thanks for that, Agam. Yes, I have a very, very special guest sitting right here with me. He's one of the most sought after traders, I would call it, in India. Hi, Atul.
Hi.
Thanks so much for joining us today on the sidelines of Traders Carnival. I'm going to first talk to you about the current trends that you're, witnessing in the market. What sort of market environment that you're foreseeing for this year? What's the current market prognosis that you have? Do you think we've topped out for 2018, or one can still witness fresh highs? I'm talking about it on a day finally when there is some respite, that we've seen some gains coming in the last 2 trading sessions.
Yeah, no, I think it's a very significant day because one is 10,600 has been an important level, and on the way down, it had found a lot of resistances. So taking out this level is significant. I won't say that we've topped out for the year or that we will not touch fresh highs. I think it's very, very possible. But what I think is that this year, going ahead, we are not going to have a massive move on the index. This index is going to actually wrong foot you. The moment you feel very bullish, the market will correct, and the moment you start feeling bearish, the market's going to go up. So this is a year where it's going to be more about stocks and being stock specific, and this is a year where I think quality is going to reassert itself. Very different from what it did last year, and that's the nature of markets, because now markets are cyclical. No trend will last forever. So last year we had a very good index move, and more importantly a very big move in small caps and mid caps. But I think this year we will not have a very large index moves. Index will be in a broader range, in range bound, but I think quality will reassert itself, and we are already seeing early trends of that. So I think that will be the trend going ahead.
So would that also mean this could be the year for large caps and not broader markets, because we've seen sharp correction for the mid cap and the small cap index this year?
Yeah, I think large caps, but I think quality, because quality transcends large caps and mid caps.
True.
So I feel that even if you're a large cap but you are not qualitatively good, you're having performances, it's not going to go up just because it's a large cap. Even in mid caps, there are a lot of stocks that have come out with excellent numbers, excellent quality, and I think they will continue to trend and keep making new highs. So I think it's about quality and performance. Last year was a lot of a hope rally. A lot of people thought that this thing will happen and this stock will do well, or these earnings will improve. But I think this year, wherever there's going to be demonstrated earnings, or wherever there's going to be proof of the pudding, that is going to get rewarded and get disproportionately rewarded. And as I said, that already in this correction, we are seeing signs of that.
You know what, last year when there was such a big rally that one saw for Indian markets, there were a lot of new investors, Atul, who entered into equity markets, and most of them, they were putting their money in mid-cap and small-cap index, and now when you interact with them, they're growing. What are you going to tell them?
Absolutely. The reason is because people, while investing with mutual funds, PMSs or AIFs, focus on returns. And that's the wrong way to go. You have to focus on strategy. So 6 months ago, 9 months ago, any investor you met wanted to put money in as a small cap fund or a mid cap fund, or a PMS that are a smaller mid cap strategy. Not because they cared for the strategy, it's just because the returns were so good. So people were chasing returns. And the pain with people who came in late is that they're seeing massive drawdowns. The fault is not the fund managers. The fault is not the strategies. The fault is the fact that if you chase returns, you cannot have a strategy that will outperform on both sides. If you have a small mid-cap strategy, it will do very well in a bull market. And we know historically that when markets correct, the correction here will be larger. So the fact is that investors should focus on strategy. And strategy is a function of their risk profile. So, it's like, as they say, that if spring comes, winter is not far behind. And if winter comes, spring is not far behind. That's the nature of markets. So if you've had that kind of drawdown and you've come in late, I don't think a fund manager or a strategy is to blame. That is the nature of the strategy. Follow a strategy, invest based on a strategy. if that strategy suits your profile, do not follow returns, because returns are very cyclical. You know?
And do you think volatility will continue to be at elevated level for 2018? Because that's been the dominant theme. You talk to any market participant, they said there was no volatility in 2017, but globally now they're saying this will be the year of high volatility.
I think so. I feel so. And at the end of the day, as I said, that we may not make massive outperformance on the upside or downside. So you will see a lot of volatility, but net you will see the index for the year may not be a big plus or a big minus. So the distance the market will travel is a lot, but at the end the journey it covers will be very little.
Everyone's not a good trader like you, Atul. People who are investing in markets, how should they look at volatility?
So I feel that you have to, the only way, and even as traders, we expect that we can ride volatility. The answer is no. It's a must. It's a very, very difficult phase. Unless until you do not stretch your time frame, your time horizon, it is very difficult to sort of surpass this. So make sure that your time horizon is large. Even people who are suffering very big losses in small and mid caps who've come in late, the fact is that if they give it time, it will all come back and give them very good returns. The problem is that people splice data. They say from Jan to May, my drawdown is so much. Hey, but go back 2 years and see, you're still up so much. So you cannot be selective. If you're going to play this kind of momentum, then give it some sort of time. The only way to sort of circumvent this volatility is to give it time. Because when markets emerge in the next cycle, all these funds and PMSs will do very well. So first, focus on strategy, and second is focus on long term. If you start taking short-term views and short-term return views, then I guess you're better off playing the derivatives market.
So you need to be a long-term investor to make money.
Yeah, you have to give it 3 years. You have to give it a cycle to sort of prove itself.
Okay, let's talk about the metrics which are in focus right now. Everyone's talking that macros now are deteriorating. Obviously, US bond yields are on the higher side. Indian bond yields have also surged. We've got crude prices which are inching higher. Rupee is depreciating. I think today we've seen some bit of appreciation coming in for rupee. What are the charts of crude and rupee indicating right now?
So I think for me, in this whole thread, which is very, very complex, I look at the tip, and which is, I think, crude for India, because it has immense impact on the currency and bond yields. And these all things really have a big knockdown effect on markets, stocks and sectors. So I really look at crude. I feel that crude in the short run has run up pretty hard, and it may kind of stabilize to correct, but I think it's going to be short term. Ultimately, I think crude is going to head higher. My target for crude has been $90, but it does not mean that, just because it goes to 90, Indian markets are going to get adversely affected. What's important for the market is the preparation. When unexpected events happen, the markets get surprised, and that's where the hit happens. But if the market starts building in or factoring in these kind of moves, I think the important point is that the market is coming to accept that crude will stay elevated.
You accept that, Atul, but when you look at a country like India, which is importing majority of its crude requirement, there is that fear of fiscal slippage.
Yes, there will be. There's no doubt about it. You're going to have pressures on currency, you're going to have pressures on bond yields, but I don't think it's going to go so out of whack. It's not going to just destabilize the whole thing, or people fear market crashes and all. I don't think that will happen. Yes, market corrections happen. Certain sectors get re-rated, certain sectors get derated, but that's the nature of market. If every time in my life, and will continue in the past and history, future, whatever you say, concerns have to be there. If there are no concerns, you will not have markets.
This also gives you an opportunity to churn your portfolio.
Absolutely. You will find that, right now what is happening is that the OMCs are getting smashed, and certain IT-related sectors are going up. So if there is fear here, there is greed here. So these things will keep happening in the market. And that's what a money manager's job is, to navigate through these things. So we are surfers, there are waves that will go up and down. Our job is to just surf.
And you like surfing, isn't it?
I like the water, I like the sea, and I very often, tend to sort of draw parallels between that. But I guess it's just a passion.
I'm not going to deviate from markets right now. You mentioned IT, Atul. That's one sector which has bucked the trend for 2018. I'm sure rupee depreciation is creating tailwind for this one. What else, according to you, can buck the trend? Do you think pharma can be a dark horse?
See, I'm a trend follower, so I'm not into picking bottoms. I'm not into finding hidden gems. I'm into actually identifying longer term trends and riding them. So for me, what you pointed out, IT is definitely a space. And what I like about IT is that it's a very large sector in terms of market weightage, and a lot of people have been very underweight. So one is that when you have a sectorial breakout like in IT, and the beauty is when there's under ownership, that actually leads to a very big surge. So I really like IT. The second space, again, may sound very cliched and not too brilliant, is consumption. But I think that consumption is still going to has a long way to go ahead. Whether it's your FMCG or other related consumption stories, I think is here to stay. And the beauty in both of these sectors you will find is that it is a relatively detached from crude or etc. and things like that. People are going to consume their biscuits and chocolates and coffees and milk, etc., irrespective of what happens to crude. And similarly, same goes for IT. So I think crude, as I said, is the big story for me for this year. I feel that crude will go higher, but in the short term it will have a pause, and that pause is being reflected in the market, whether it's today or will be in the short term. So I feel that you want to get away, as far away from industries that are dependent on crude as an input.
So 90 is your target for crude.
Okay, and that conversation, of course, will continue. You'll hear on our social media pages as well. This is live from the Traders Carnival at Renaissance, Mumbai. Some flashes on your screen, and I know Sarvendra and Manav are waiting. We'll get to you, gentlemen, in a bit, but IDBI Bank numbers are out. The net loss of 5660 crores and gross NPAs, those numbers, 28%. The stock won't fall 20% because a lot of people probably preempted this, but these are not great numbers. Now let me first try and get in my colleague Ira Duggal. She's a banking editor at Johnson right now with a quick perspective here. Ira, nowadays higher gross NPAs number don't surprise us for a reason, because we now seem to have seen them a lot, but 28% is just mammoth.
Yeah, I mean, look at it in another way, right? More than a quarter, closer to a third of the bank's book has turned bad. And this is one of your larger lenders, most significant lenders. But just going to run you through the numbers. So the net profit or net loss at 5662 crore would be among the top 5 losses reported, largest quarterly losses reported by Indian banks. Obviously, provisions are to blame for that, because provisions have jumped to 10,544 crore compared to 5,864 crore in the same quarter last year. So they have taken a huge hit on provisions. That's not always bad, as we have seen even in the case of SBI. The market seem to like when you take the provisions up front. And what that big jump in provisions has managed to do is keep their net NPA ratio in check a little bit. So their net NPA ratio is about 16.7% compared to 16.02. So while they have seen the gross NPA ratio go up by at least 3 percentage points from 24% to 27% or near about 28%, the net NPA ratio has been relatively little bit more contained. I'll tell you why I'm focusing on that in just a minute. But I also want to look at the aggregate addition to the gross NPAs. So that has gone up from about 50,621 crore to 55,588 crore. We'll get back with more details on this, but the point here simply, and the reason IDBI Bank was important, was the fact that, remember, this is a bank which has been under the RBI's prompt corrective action framework since May of 17. And the question being asked right now is whether some of these banks will be put under a second round of PCA, which is much tougher. Now, if you go by their net NPA number, which is 16.69%, IDBI Bank falls in risk threshold 3, which is the highest risk threshold. Their negative return on assets of 6.68% also puts them in that risk threshold 3. The only thing that saves them a little bit is their capital adequacy ratio, but even that is dwindling because their capital adequacy ratio has fallen to 10.41% and CET1 ratio has fallen to 7.42%. We'll hear from the management, but if the RBI is going by quantitative understanding of what the PCA framework is, then this bank is a prime candidate for steeper restrictions. Neeraj?
I hope somebody is listening into this. Ira, thanks so much for putting that into perspective. And amongst the top lenders in the country, amongst the highest losses, maybe losses amongst the top 5 in the quarter that is released, or probably ever as well. This is not joke. I mean, we are kind of smirking or smiling at the fact that the gross NPA levels are at 28%, but that's just serious carnage in the bank's books, to be honest. And 3.5% done for IDBI Bank, not a great day at all. Sarvendra, it used to be a fairly popular trading stock, probably still is. 19 million shares traded seems to suggest that there is enough and more activity on IRDBI Bank too. It is a result-related move, so I want to hold you to it if it doesn't turn out the way you're predicting. But just looking at the charts right now, what would you think could happen to IRDBI Bank?
I think broadly I would say that the stock, the trend has been damaged and the stock needs to do a lot of repair work. So extremely going short term, I think over the last week, 10 days, if I look at it and if I say that with the result, probably it's basing out, then there's a small bullish head and shoulder formation which is visible. But I would say that I don't want to trade that, and the stock is trading at a long-term 200-day average for the last now month and a half, and you want a clear breakout from this range. So I would say a 60 to 70 range. That is a no-go range, and once you break past 70, you probably want to put some longs in the system, and break below 60 probably you used to short. Rest, I think it is in this 10-point band, it is best avoided for the next couple of sessions, if not more.
Okay, the other stock which is on a tear right now is Just Dial. Of course, we've seen earnings come through, and on the back of that, we've seen 2 straight days of gains. Manav, can you come in on Just Dial? Can you tell us about the kind of trends that you're witnessing right now, and what levels can one watch out for?
Yes, in fact, the stock after a good sideways consolidation has observed a very good breakout. But one thing to note is that, the stock recently, after bounce from its recent lows, has been forming a series of minor tops and bottoms. This breakout has been accompanied by very good volume in the last couple of trading session, and the prices have also closed above important weekly support levels, and it's also closing above its long-term averages. So I think going forward you will definitely see some sort of a momentum, and it's a complete trend reversal that has happened, at least on the short-term front. So on the immediate basis, we could see the levels of 540, 545 on the upside. The support for the stock would be at 490 on the lower side. I recommend a stop loss below 490, and one can actually have a short-term trade into this even at the current levels.
Okay, with that, we're going to slip into a short break, but don't go anywhere. In the next 20 minutes, we also decode as to what we can expect in the markets in the coming week. So back in a bit, stay tuned in. Welcome back. You're watching Countdown on Bloomberg Quint Live. Well, the markets are looking up right now. Some strengths seen. But what is it that we're witnessing when it comes to some of these stocks which are advancing? We have Yash Upadhyay joining us to give us the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Agam. So a lot of stocks that are moving on the back of earnings. We already addressed Sudarshan Chemicals with Time Technoplast. That is another name. It's up almost 15% today. Now their revenues, they have grown by 16% to 943 crore rupees. The net profits up 30%, while their margins, they have expanded by nearly 200 basis points on a year-on-year basis. So all in all, a good set of numbers, and the stock's reacting quite positively. Now Gateway Distriparks, this one's locked in a 20% upper circuit today after the company announced that they would be buying the entire stake of global investment arm Blackstone Group in their subsidiary company, which is Gateway Rail Freight, for a total consideration of about 810 crore rupees, with the deal expected to be completed within the next 90 days. GAIL is up 3%. That one too came out with their numbers yesterday, earning it a big upgrade. We had CLSA come out with a report earlier in the day wherein they have upgraded their recommendation from a sell to a buy, and they've also hiked the target price from 337 to 405, indicating a return potential in excess of 31%. And finally, Just Dial, this one's been gaining for the last 4 trading sessions since it announced their Q4 numbers. It's up 9% today as well, and in the last 4 days has managed to gain close to 25%, with volumes almost double the 20-day average. Back to you.
Thanks a lot for that, Yash. GMM Pfaudler is the other one, I think, has just gained quite a bit in the last few minutes of trade. I'm looking at stocks which have gone up in the last few minutes, include a Hathway Cable, which is up 3% or 3.5% from the levels that it was trading at. Dhanuka Agri has had a bit of an uptick in the last few minutes of trade, and there is some strength in Shilpa Medicare and Diwan Housing too, stocks which have gone up in the last few minutes of trade. Anand Tandon, market expert, joins us right now on the show with his thoughts. Sarvendra and Manav Chopra are with us. Gentlemen, all of you, thank you so much for staying in, and Anand, thanks for joining in today. Anand, if I just look at the index moves, there is a fair bit of confidence, and within that index move, there is a fair bit of pullback that's happened in the oil and gas names, both upstream and downstream. Was the market playing in on a rumor or an expectation that the PTI reported yesterday, and now is trying to digest that maybe oil may not be that bad? Because ONGC, Oil India, GAIL, IOC, BP, HP, all of them are up and about today.
I think it's, everything is up today. I don't think it is anything specific to upstream or downstream. But within between the two of them, obviously, first of all, the stocks have been beaten out of shape quite badly. And the second thing is that the refining area still looks quite decent, because if at all you're looking at the oil sector, refineries are not going to do very badly, at least in the current environment. And even if the news were to be true that, there would be a windfall gain tax on the upstream sector, that will actually ease the pressure on the downstream. So all in all, there is a case to be made for looking at the downstream companies. I don't think the same applies for the upstream, except for the fact you may have a view that the oil has perhaps peaked out, in which case, it may come down again. But all in all, that's not I don't think there is anything specific for that move today, other than the fact that the market per se is in a very buoyant stage today.
Anand, good afternoon. We have seen a little bit of a reversal on the benchmark indices, but when it comes to the broader markets, in terms of opportunities in quality stocks, how are you viewing some of these stocks when it comes to those which are fundamentally much sounder in comparison to valuations for the stocks that you are tracking right now? And if you could also give us some examples.
Well, I think the key call you have to take is whether the momentum will continue, or you will see a slowdown in the momentum because of whatever is happening in terms of interest rates and the rupee and so on. If you argue that the momentum will kind of ease off, then obviously you have to look at value companies rather than growth companies, because the growth companies are being priced for growth and then some more. You are assuming that the growth will continue in perpetuity. Whereas the value companies, many of them have been thrashed out of shape. So, for example, the utility sector, it's hardly the most exciting sector right now. There are issues in terms of buying power and so on. But there is also no new capacity coming up. There is idle capacity which will get on stream, for example, over the next 12 months or so, because many of the older plants are getting mothballed because of problems with pollution and so on. And one could argue that, at about 2.5 crores per megawatt of capacity, you're probably seeing the bottom of the capacity cycle. So clearly, that is, utilities is one area that I think bears mention. It's not going to make you rich between today and the next quarter earnings. But I think if you were to look at it on a 2-year basis, there is a high probability that you will get outsized returns there. So there are sectors like that which I think will slowly come back into shape as the front line eases off. But in a market like today, where clearly it's fair picking for almost everything, you don't have to search very hard.
Okay, Anand, stay on. So much more to talk about. We'll get in closing strategies from Manav and Sarvendra, but before that, it's that time of the show when we get you what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so today the battery stocks are doing well. Exide seems to be outperforming Amara Raja, but nevertheless, both of them are trading much higher. Exide is up almost 6%. Amara Raja is up almost 2%. Some of the HNIs are actively accumulating these counters. That's what we hear from some of the dealing rooms. The other pack is Tata Elxsi, which is up almost 3%. A significant amount of domestic mutual fund flows are going into the counter, so that is something that is positive. And Indian Oil is something that dealers are speaking about. It's up 5%. The way crude and rupee have behaved, that's something that dealers indicate that there is heavy accumulation that's happening. But Yatin has more.
Well, as Darshan was mentioning, IOC dealers are also recommending a buy on HPCL. That is one stock, again 5% up for that one at the day's high. In general, dealers are talking about the oversold region in which the oil marketing companies are, and from here on, dealers do expect some bit of bounce back as far as the entire oil marketing pack is concerned. So HPCL is something wherein dealers are recommending a BTST kind of a strategy. Apart from that, do watch out for Tech Mahindra. That is one stock wherein domestic funds are said to be buyers in trade. That they will be reporting their quarterly earnings as well. So Tech Mahindra is something wherein dealers remain positive on. And Deccan Gold Mines, that is also one stock. Has been volatile. Remember, The stock has been moving, plus or minus 5% in that circuit band limit. But today, after the HNIs have been, buying shares for the open market, we are looking at some, good volumes as well as price action in the stock.
Okay, well, of course, Tech Mahindra stood out for me because we are expecting earnings. Thanks, Yatin, for bringing us those, dealer room checks. But like I said, Tech Mahindra, of course, remains in focus as it announces its earnings a little later on in the day. That said, I also want to pull up Indiabulls Housing Finance. What we're also witnessing right now is a surge in the last half an hour or so, and it's also the top Nifty gainer as of now. Manav, can you come in on Indiabulls Housing Finance? It's currently trading at around 1170 after substantial weakness over the previous 3 weeks. We are looking at a little bit of resurgence. Is this largely on account of short covering?
Sorry, I will not be able to comment on any of the our group companies, but from the HFC space, I think even Bajaj Finance or DHFL are some stocks which are trading near the important support level. So DHFL specifically has also observed a good breakout from the current level. So I think going forward, in case if the levels of 620 is breached on the upside, we could see the levels of 640. So this is one stock that we can also look at from the housing space.
Okay. Before we get in closing strategies, there's so much happening around. Let's go across. I think the IDBI Bank management is talking. Let's just hear out a brief of that. Then we come back and take in closing strategies.
Because we were the first bank where the capital conservation buffer was dipped by any bank operating in India. So we have reached to CET1 CCB at 7.42% against the regulatory requirement of 7.375, which was as on March 17 was 5.64%. So there is a substantial improvement as far as CET1 is concerned. We maintained the total capital adequacy ratio at 10.41%, vis-a-vis last year's number of 10.70%. Despite of the fact that during last financial year 17-18, we exercised the call option on 81 bond, which was amounting to rupees 5,000 crore, resulting into 2% impact, negative impact on the capital adequacy. Despite that, we were able to maintain 10.41% as our total CRAR. As we explained to you that to reach out these capital numbers, we draw out certain strategies. One on the risk-weighted assets. We reduced our RWA from March 17 to March 18 by 18%, from 2,68,000 crore to 2,20,000 crore. We started this process in the month of Feb and March 17 itself. As on December 16, we were having close to 3,26,000 crore of risk-weighted assets, which now has come down to 2,20,000. And we told that we are adopting a capital-light business model. And through capital-light business model, as well as the churning of our existing portfolio, wherever there is a high risk, we have to try to come out of those high-risk assets. So through capital-light model, our retail versus corporate book, the composition had changed from 60-40 as on March 17 to 55-45 as on March 18. Then credit RWA to the total advances has come down from 110% as on March 17 to 90% as on March 18, despite of the fact that our non-fund based book is higher in comparison to many of our competitors in the market. If we include in the denominator the non-fund based book as well, then the actual credit RWA to the total exposure is 75%. So which itself is a big achievement, and that could happen because of various strategies. As we committed that total non-core asset sale during this financial year, last financial year 17-18, we could sold out our various assets to the extent of 4,500 crore with a capital gain of 3,870 crore. Then there was an infusion of capital by the Government of India, and total the Government of India infusion of capital was 12,471, including recap bond of 7,881 crore and 390 crore.
All right, that's IDBI, and we'll of course get you snippets of that conversation. But just last 5 minutes of trade left, need to wrap up the markets. Before we do that, Sarvendra, Manav, let's play a bit of a rapid fire since we've had slightly short time before the market ends. So maybe would expect, I'll ask you quick questions and maybe quick answers. Sarvendra, to you first. IOC, HP, ONGC, any trades on any of these?
I will go with HPCL out of those three names if I have to go. I had picked up I actually picked up Chennai Petro for BTST. But I will go with HPCL. I think a decent reversal there, a 3-bar, nice reversal with momentum. So stock could go towards 305, 310 over a day or two. And anybody wanting to take that trade will have to keep a stop loss below 289.
Okay. But your top closing strategy is Chennai Petro. Is it, Sarvendra?
Yeah, Chennai Petro was my BTST, where I believe that the stock could go towards, give you a 6-point move on the upside. So around 286, 287 is what I would look as a target for tomorrow. Okay. And while doing that, I'll keep a stop loss at 278.40.
Okay, 3 rupees stop loss, 6 rupees target on Chennai Petro. This is the pure BTST. Manav, what would your top BTST be?
See, at the current levels from the pharma pack, most of these stocks are seeing some sort of a bottoming out. Glenmark, in fact, is showing a good bottom reversal. At the current levels, I recommend buy into this. It's also observing some short squeeze pattern. So a stop of 532 on the lower side for an upside target of 550.
All right. Anand, coming down to you, any opportunities right now that you are spotting in the markets in terms of themes or stocks?
As I said, there are lots of beaten down themes which exist, which are outside the consumption and the private banking space, which are the two areas which have been doing really well. And those include the less favored ones, as I said, utilities, the corporate facing banks, the infrastructure plays, the defense area. All these are stocks which have fallen out of favor. And I think you will find that there will be some reasonable bounce back in them if the market has to continue.
Interesting. One quick thought on a stock which has really gained the last 2 days, Manav Chopra. Time Technoplast, if you track that one, went down all the way to 122, has bounced back to 154. Can you pull up on the charts and tell me what you think of the charts?
See, the stock after a series of decline has bounced from its important long-term averages. Definitely the short-term momentum is coming back into play. I suggest that, at the current levels, one can look to only buy with a strict stop loss, which would be placed at 150. In case if the levels of 150 is held, we can expect the upside levels towards 168 and 172.
Okay, I'm going to follow through with a question on Sudarshan Chemicals. That's the other one which has seen a sharp surge. Sarvendra, can you come in on this one? There has been a spike in Sudarshan Chemicals on the back of heavy volumes, of course, largely attributed to earnings. What's your view here?
I would say I would avoid. It's a slightly illiquid name, and it's more to do with the event. So you'll have to let the event pass, probably let it settle a day or so, and then probably take a call. Very, very illiquid and a stock which we don't cover regularly.
Okay, with that, I'd like to thank Sarvendra and Manav for joining us and taking us to their views. But I'd request Anand to stay on because we do want his closing thoughts on that. With that, I'm going to toss it over to Neeraj to tell us about how the markets have panned out for today.